Hello children, how are you doing? I hope all of you are doing well and final accounts is going down well with you. Till now we have done trading account and profit and loss account, isn't it? Which are prepared after your trial balance, correct? Now what happens? You just see this. Your trial balance has all these different types of accounts, all expenses, incomes, assets, liabilities and capital, right? So already while making trading and profit and loss account, all expenses which had a debit balance are already put here. These expenses have found a place here on the debit side of your trading account or profit and loss account. Then on the credit side we had put all incomes which had a credit balance. So these have come over here, right? Incomes. Meaning all incomes and expenses related to this year, the accounts have been closed already because we needed it to calculate our profits, gross profit, net profit, isn't it? So after we did that, suppose we had a net profit, alright? This is my net profit. This year's report card is ready. Meaning this year I have earned this much, spent this much, and this is the profit I have earned. But over the years, the business has been doing business maybe 5 years down the line. So now we need also to we need to also present the various assets and liabilities and how much is the capital, the net worth of the business. So we have assets on the debit side and the liabilities on the credit side, and the capital too on the credit side. So after these have gone from the trial balance, what is left? Assets, liabilities and capital. Where do I show them? I show them in a different statement, which is called the balance sheet. Balance sheet meaning? This sheet tells me that assets is equal to capital plus liability. Yeah, sounds familiar, right? Accounting equation. So this is what is being shown here. There's no account, okay? It looks like an account, ledger account, but this is not an account, it's a statement. It's a statement which lists, just like trial balance is a statement. Trial balance has all the ledger accounts, but out of that expenses and income are gone in calculating profit of this year. So what is left? The assets and liabilities and the net capital. That statement which shows that the financial position of the business is called a balance sheet. So assets we will put here. So all the assets which have a debit balance will come here. All assets, furniture, land, investments, cash, bill receivable, debtors, stocks, and all liabilities will come here. Okay, obviously. They don't like each other. Assets are ulta, liability are ulta. So they will be on the different pages. So liabilities we put there, and by liabilities we mean external liabilities, meaning creditors, bills payable, outstanding expenses, bank loan, bank overdraft, all those things. Apart from that, we will have capital too. Yes, because capital plus liability is assets. My balance sheet total should be equal. Whatever total I get here, the same total I should get that side also, right? If we get that, our balance sheet is tallied, meaning we have not made major mistakes, hopefully, of course. It's not a foolproof evidence. We'll come to know that later when we do rectification of accounts. So this is here, this is here. This is the financial performance of 1 year. And this is the financial position on a particular date. So we always write balance sheet as at 31st March and whatever year is given. Alright. This is for a particular year. For the year ended 31st March 18. Now you see, of course your trial balance also, this total is equal to this total. Debit should be equal to credit. So that way also your balance sheet should also reflect the same thing. Alright. And what do we do about the profit here? Where does this profit go? The profit is always added to the capital, because suppose I have invested 1 lakh and I have earned a profit of 5,000. Obviously, I invested 1 lakh. Now my capital is 1 lakh 5. Isn't it? That profit is mine. So this net profit is added to the capital. And then that is the final figure for your capital. Okay. So we will take a small sum and then we will understand how these things work out. Alright, so you have seen the sum. The sum gives you a trial balance. Trial balance has a list of all income, expense, assets and liabilities. So first thing, there are two methods, okay, to go about making final accounts where you have to make everything, trading profit and loss and the balance sheet. Now some students find it convenient to do it one by one. Whatever is given, you know that whatever is going to go to the trading account, they put it there and they finish off with the gross profit. Then they come to the profit and loss account. Again, find out, look for things which are supposed to come for PL, put it there, find out net profit, then bring net profit here and then the remaining items of the balance sheet, I mean the trial balance, are put here. That's one way. Or the second way, basically my way, okay, my teacher taught me this way and I found it really easy. So I have been following this since my school time. So the second method, whatever is given, each one, I know where to place it, okay. And of course, I know now, but you will also know. When you do 1 or 2 sums or 4 sums maybe, you will be, in the skin of it, okay. So you will try to go with this. Otherwise, of course, there is a second method where you can always do. So I will just show you how to do things. This is your choice. Now, this is in the books of Sri Badri Vishal on 31st March 2018. So you will write the name on top there, Sri Badri Vishal. Okay. So write here Sri Badri Vishal. Of course, you will have to take 2 different pages for this. This will take up 1 page, this will take up 1 page. Do not be a miser when doing final accounts. It takes space. You have been given closing stock valued on that date. You see that it is given outside the list of ledger account balances, meaning closing stock has not been subtracted from purchase. It has not been adjusted. So it will come in both the places, meaning trading account also and in your balance sheet also. The balance sheet I have divided already as this is the asset side, all assets, but I am just for the sake of convenience put fixed assets first and then current assets. Here also I will put capital first and current liabilities later. This is also called balance sheet drafted in the order of permanence, meaning these are the permanent things, these are the temporary things, okay, like that. Now you can be asked to make the balance sheet in the order of liquidity also. So ulta ho jayega. We will put liquid, current assets first and then fixed assets. Similarly, current liabilities and then we move on to capital. Just a way of presentation, baki sab same hai. Okay, let's start. Capital is given as 1,28,200. 1,28,200. I have kept it in the inner column because there will be changes to it. Household expenses meaning drawings. Capital. Drawings should reduce the capital. Okay. So I subtract drawings from capital. This is basically the effect of the closing entry or transfer entry, you can say. Capital account debit to drawings. Okay. That is how the capital should reduce because you have withdrawn 10,000. That which is given here is opening capital. So साल के beginning में 1,28,200 था, उससे 10,000 कम हो जाएगा. Correct? Because he is withdrawn. Sales are 1,80,000 and there are also sales returns. So I will keep it in the inner column because I have return inward. Inward meaning sales return, which are 4,000. So 4,000 subtracted from it, 1,76,000 is my net sales. Correct? So I put in there. See, as and when things are coming, I am putting it there. Not in first trading, then PL like that. Return outward and then purchase is also there. Return outward meaning purchase return. So we know that this should come here. Purchases 1,50,000 less returns. How much? 6,000. 6,000 out of 1,50,000 gone. So 1,44,000 is my net purchase. I always say net purchase because that's the cost. Cash at shop, meaning cash in hand. That is a current asset, so I put it here. Cash at shop. Okay, we take it as 1,600. Okay, then we have bank overdraft 15,000. Bank overdraft is a current liability, so bank overdraft 15,000 comes here. So it's that simple. Okay, you don't miss out on anything also. Interest on overdraft. Interest on overdraft is always an expense to you and some indirect expense. So I leave a few lines here for my remaining items of trading account. And I start my profit and loss account. Some people choose to make two separate accounts also for trading and profit and loss. I am just redirecting it here. First segment is trading, close it, and then I bring the gross profit here or loss. So here I write interest on overdraft 1,500. So I'll put all indirect expenses here and start from here. Creditors are my current liabilities. So I put it here 17,800. Stock at commencement meaning opening stock. Commencement meaning beginning. So this is opening stock. You can also write stock at commencement 18,000. Then freight. Freight meaning, yes, it's nothing is given, so I take it as freight in word. Okay, freight is paid on movement of goods when you purchase it. If nothing is given, you assume it's purchase, it's direct expense, so I put it in the trading account. Rent and taxes are always indirect expenses since nothing is mentioned. Of course, if it would have been mentioned for factory, then debtors. Debtors are current assets, so I should put it here. Debtors 32,600. Alright. Commission. Commission is given, okay, in both the columns, the debit as well as credit. Commission can be, you know, that it's an income also, an expense also. If it's received, it's income. If it's paid, it's expense. Both are given. So commission will come on both sides. The commission which is given on the debit is commission paid 3,000. Please make a note of it. Alright. And whatever commission is on the credit side, that will be commission received, and that should be treated as an income and on the credit side. Got it? Freehold property. These names are fixed asset. Freehold property. Property meaning your building, your land, whatever is there. So that is freehold, meaning not on lease. Then you have sundry expenses. Sundry expenses are indirect expenses. 3,900. Then you have salaries and wages. Now there is a controversy between these two. Sometimes they are merged elements. You know salaries is indirect and wages is direct. But sometimes it will be given, merged together. So just for the sake of, convenience, we've just framed the rule that if salaries and wages is given, that means maybe salaries are more, therefore that is given first and more importance. So you put it here in the indirect expense. Or if it is given wages and salaries, so wages ka importance zyada hai, udhar dal do. This is not much logic here, but then that's for the sake of simplicity. Okay. So salaries and wages are put here 20,000. Then life insurance premium. Whose life insurance business? Proprietor. Always drawings. So less life insurance premium 1,800. It will not be given as drawings maybe, but you have to treat it as drawings because this is for the life of the proprietor. It's a personal expense. Why should business bear that? Insurance premium, not life. Insurance premium can be paid by the business. for ensuring its property goods. So that will be an indirect expense. Insurance premium. Motor vehicle, fixed asset, stays with us for a long term. Motor vehicle, 39,800. Then typewriter again, fixed asset, typewriter, it's an equipment for us. Then we have interest on the credit side. Interest again can be income expense. Credit mein diya matlab income. Okay, you have to take care of this. Interest is 800. Fine. Then you have carriage inward, carriage outward. Carriage inward, direct expense. Okay, carriage inward is 2000, direct expense. Carriage outward is indirect, so it is in the PL account. Fine, remember this. This is on goods purchased, this is on goods sold. PAR. PAR is always related to factory, manufacturing expense. So PAR will be 2200 on the debit of trading. Audit fee and lighting. Audit fee and lighting. Lighting, it is not mentioned for factory, so we will assume both are for like indirect expenses only. Then just that closing stock is left. Okay, closing stock, it is said that it is 15,000. Always remember, when closing stock is given outside my list of ledger account balances, it will appear on both the places by closing stock, because I need to adjust my purchases, meaning it's just as good as subtracting from purchases. And also I will have to show it as my current asset, because this is what is going to fetch us money in the next year. So current asset 15,000. So closing stock appears on both the places, there credit of trading and in the current assets in the balance sheet. Okay. Now once we have placed all of this, what do we need to do? Find gross profit, net profit and the balance sheet total. Finish. Let us total it up. Now let us see, this side total usually is more than this. Okay, so if you total this up, you will see that this side total is coming to 1,91,000. And this side is lesser than that. Basically, you don't have to do the total. From 1,91,000, subtract this and this. Meaning from your income side, you subtract all expenses and you will see that there is a shortfall on this side of 16,300 rupees. And that I transfer to profit and loss account. What is this? GP carried forward. Gross profit, right? Gross profit is being transferred to profit and loss account. So my total is here. I have closed the trading account. I bring down here, I write here by trading account, gross profit brought forward 16,300. Alright? Now when I do the totaling, I see that this side total is less, this side total is more. You do it for yourself. This side total is more, meaning my expenses are more, income is less. So where will the balancing figure be? On the lesser side. So that balancing figure is coming to 22,200. The total being 41,500. This here, this side. And now it will be 41,500 here too. What is this? Is it a profit or a loss? Yes, a net loss, and that should be debited to capital account because that reduces your capital. Loss meaning your investment is reduced, isn't it? You did not add on to it, there is no profit, therefore your capital will not increase, rather it would decrease. So this 22,200 is the loss which I am transferring to which account? Capital account. Meaning I am subtracting from here. I should show it here also. So with this my PL account is closed. I transfer this loss. I will do less net loss. 22,200 here. So all of this I am subtracting from my opening capital. The drawings made, life insurance premium paid, the net loss. This will give my closing capital. Okay, so my closing capital would be 1,28,200 minus 11,800, 12,000, 34,000. Right? So if I do that, I get 494,200, which is my closing capital. Alright? I'm subtracting this and getting this. Now, this is all of the liability side, this is all of the asset side. It should be the same. So, how much is your balance sheet total coming to? 1,27,000. 12, 4, yeah. Yes, correct. 1,27,000 here, and here also 1,27,000. Alright? So with that, my balance sheet is also tallied. Pretty smooth process. I have not missed out on anything, and my totals are all correct. So this brings me to the end of my final earnings. Okay? So this is a very basic sum that we are doing without the adjustments. Okay? Adjustments we will do later. But let us get used to this first, maybe a few more sums, and then we can move on to the different adjustments that will be done. Okay? So till then, take care children. Please solve such sums which are given in the book, full length sum, in parts also trading, profit and loss, and all those things. So here you should be, abreast with all the, the basic fundamentals of making your final earnings. I hope you liked this video. Please do like, share and subscribe. Thank you so much for watching.